Hello and welcome to Tech Talk, the Bankers video series looking at developments in the global fintech community. I'm Joy Macknight, Technology Editor at The Banker, and with me is Nick Armstrong, CEO of Identitii, an Australia-based fintech startup which promotes a know your transaction approach. Nick, thanks so much for joining us today. So it's very interesting. We've had all this buzz around fintech and we've had also buzz around insurtech, and now it's all about regtech. Why is it so popular right now?
So I think fintech was really focused on the front end of banking, so trying to improve the customer experience or reskinning the banking front end. Regtech is focused on the more complex issues around the back end, increasing compliance. We know that headcount is increasing significantly in compliance teams. In some cases, banks can't hire enough qualified people. So we think that technology has to be the solution. It's the only solution to meeting these increasing regulations. And Identitii is now looking at opening a London office because we're seeing regulations like PSD2, also MiFID II, really driving a demand for technology solutions like ours here.
So distributed ledger technology is also a very hot technology topic. How does Identitii use that in compliance?
So DLT, or distributed ledger technology, is really an advanced database that does a few things very well. It enables secure, auditable exchange of information in a trusted way between parties that don't necessarily trust each other. Identitii uses DLT slightly differently to a lot of other companies in that we create an overlay to existing payment networks, like SWIFT, for example, and we put a little token into a payment message that enables banks to exchange information about payments with no change to the existing payment networks. We've just completed a 6-month pilot with SWIFT. We had 7 banks participating in that pilot. And I'm pleased to say that we found some really big benefits in using this. We found a 20% reduction in the amount of time that it takes to do an investigation relating to money laundering and sanctions. We found a reduction in false positives, so payments getting held up because there's some information in that might be flagged on a sanctions list. And a reduction in risk, which is hard to quantify, but having that auditable record of information means that a bank can go back in time and look at what information was there and make sure that that hasn't been tampered with.
It's interesting though, because a lot of people are quite concerned about the fact that, you know, when we move to faster payments, which is happening in the EU, it's already happened in the UK, it's also happening this year in the US, that move to faster payments might actually create some security issues. But why do you think that moving to secure and faster payments will actually help with compliance, but also with financial inclusion?
Yeah, sure. So I think there's a few issues that we need to consider here. One is that know your customer, we believe, is no longer good enough. We think that you need rich information about each and every transaction. So we're trying to coin a new term for the industry called Know Your Transaction, KYT. And this is going to be something critical as we move into the future of new regulation. Now, faster payments in particular need to be fast. And by definition, having a fast payment means that you need to limit the amount of information that can be sent with a settlement instruction. So the alternative approach is to store the rich information that banks need to meet their increasing compliance requirements off the actual payment instruction itself. We think DLT is the right technology for doing that. And what that does is speeds up the payment, but then enables an auditable historical record of the additional information that banks need to meet their increasing compliance requirements. And that's one of the big benefits of DLT. And just another point on that is that it is tamper-proof as well. So that if you're maintaining multiple nodes in the network, then if one of those is tampered with, it won't reach agreement with the other nodes in the network, and therefore that will help to reduce fraud or tampering or scrubbing of information, for example.
So I've heard you say before that you want to turn banks into data companies. What do you mean by that?
So when we say turning banks into data companies, what we're talking about is using the data from each and every transaction to build up a better picture of what a customer is like, so who they are, what type of business they're in, what type of transactions they do regularly. And this does a few things. One is it helps in payment processing. So you can understand if a payment as a bank is being used for money laundering or some other nefarious activity. But it also enables the bank to offer better services and cross-sell to their customers. And so using the distributed ledger to build up a picture, effectively a historical picture over time of what a customer does, is quite powerful in offering other products and services.
And my last question is really, what do you think is the biggest pain point in financial crime compliance, and how does identity help solve that?
I think legacy systems is the biggest pain point. So you've got two options really: rip and replace, which is slow and costly, or create an overlay service, which is effectively what identity does, and using basically to augment existing systems like SWIFT or like legacy systems within banks. There is an imperative on banks at the moment to continue to do business in countries that are hard to do business in, because otherwise that money is going to go underground. It's still going to want to move around, but using an overlay service to existing systems is the quickest and fastest way to help improve financial crime compliance today.
Great. Thank you so much for your insights, Nick.
Thanks, Joy.